Hello everyone and welcome back to TradeSmart. As you might know, I am generally focused on crypto trading strategies, but lately multiple Smart Trader tier members have asked me to develop optimizations for futures like NQ or ES. So I had no choice, I had to get this done. I got to work and after a few days I came up with a mind-blowingly good optimization for our Deadzone premium strategy. I optimized the script for the last 4 years, but after checking out the results, I found out that this optimization is actually profitable starting from 2014. And the results? 1600% net profit with 30% maximum drawdown using realistic fees. In this video, I will briefly explain what futures are and why are they better than trading the traditional US 100 or S&P 500 index. I will explain a simplified version of the optimization I mentioned to make it easier to trade for manual traders. Obviously, the simplified is not as good as the original optimization, but it is very close to it. Then I will show you the backtest results for both the simplified and the original optimization. And finally, I will let you know how you can get access to this premium TradingView script that I used to create this amazing optimization. This script is highly customizable and can be turned into an automated trading bot. Without wasting any time, let's get right into it. First, let's take a moment to discuss what futures are and why trading futures like the NQ might be a better decision than trading traditional indices like the US 100 or the S&P 500. So what are futures? Simply put, futures are financial contracts that obligate you to buy or sell an asset at a predetermined price at a specific time in the future. Traders use futures for both speculation and hedging. Unlike traditional stocks or ETFs, futures give you access to high leverage, allowing you to control a large position with a relatively small amount of capital. While trading traditional indices might need you to have at least $10,000 of capital, trading futures has no limit like that. You can start it at as small as 100 USD with the right broker. Now, why would you choose to trade NQ over something like the US 100 index? The NQ1 is the futures contracts for the Nasdaq 100. The main advantage here is leverage. Trading NQ futures requires less upfront capital than trading the equivalent value in the US 100 index. Plus, futures trading has tax benefits in some cases, lower fees, and can provide better market access during extended hours. That means more flexibility and more opportunities, especially if you are an active trader. Similarly, the ES contract represents the S&P 500 futures, and trading it offers similar benefits. In short, trading futures can provide significant advantages from increased leverage to lower fees and great flexibility. Now with that out of the way, let's see the strategy optimization I came up with. Okay, so let's go over the simplified version of this optimization. To trade it manually, first open up TradingView and set up the NQ1, this one, on the 5-minute chart. Then let's set our indicators. First of all, for our stop loss and take profit levels, we will use the NNFX ATR, this one. Then for a trend confirmation, we will use the range filter, this one. For the exit signal, we need the squeeze momentum, this. For our main entry signal, the WADA TAR, this one. As another filter, we will use the RSI. That's a built-in indicator, so add this one. And finally, for the momentum or volatility filter, we will use the ADX, this one, alongside with an exponential moving average. So add this one. For the ADX plus EMA, find the original EMA on your chart. It will be this blue line. Click on it, then start pulling it down and release it on the EMA. Then open up its settings and change its source to ADX. This way the EMA will move according to the ADX. Okay, we have all of the indicators needed for this strategy, but we need to change a lot of settings. So let's start. First open up the take profit and stop loss indicator, the NNFX ATR. Change its X value, which is its length, to 150, the TP value to 9.9, and the SL value to 3. Then go to the styles tab, uncheck these options, then change the line styles to step line. Next, the trend filter, the range filter. Open up its settings and change the sampling period to 50 and the range multiplier to 7. Then our exit signal indicator, the squeeze momentum. Here you only need to modify the KC length and set it to 90. Then open up the WADA avatar or main entry signal, set its sensitivity to 250, the fast EMA to 20, the slow EMA to 100, and the BB channel length to 80, and finally the BB STDEV multiplier to 2.8. You can also go over to the styles tab and change the explosion line to white and the Deadzone line to yellow. I also changed the line style to simple line. And now the RSI. With this RSI we will use it in a special way. I will explain it in a moment. Set its length to 70, then go over to the styles tab, uncheck the RSI based MA, uncheck the middle band and the lower band, and change the upper band value to 60. Finally, just change the RSI background field to red. And the last indicator, the ADX with EMA, open up the ADX settings first, change the smoothing to 85, the DI length to 5, then open up the ADX based EMA, change its source to ADX, its length to 55, and change the color to white. And now we have all the indicators correctly set up for the Simplified strategy. Now, as this is a long only strategy, let's go over the rules for longs. And here we have a valid long entry signal. For a valid long entry on the range filter, which is this line at the middle, the last signal should have been a buy signal. So let's look back. And here is the last signal, and it is a buy signal. This confirms that we are in an uptrend. Next, on the WADA avatar, the main entry signal indicator, its histogram bar should be dark green, which is this one, or these ones. If it's light green, like this, or it's red or orange, the long entry is not valid. Also, the histogram bar should be above both the explosion line and the Deadzone line. And finally, the explosion line needs to be above the Deadzone line. And now the RSI, which we'll use somewhat differently than traders normally use it. Usually they want to enter into a long when the RSI is low, so at an oversold value, but we want to enter into a long position when the RSI gets above the 60 level, which occurred right here. On the entry signal candle, the RSI is around a 60.72, and this red area is everything below 60. And finally, on the ADX plus EMA, the ADX needs to be above the EMA. And as you can see, that is also met. So all of the conditions are met for a valid long entry. Let's see where the stop loss and take profit levels will be. We will put the stop loss at the NNFX ATR low band, which is this red band here. And the take profit will be up here at the NNFX ATR's blue band. Technically, this is a 3 times ATR distance, and this is a 9.9 times ATR distance. But these two levels, the stop loss and the take profit, are not the only way that we can exit this position. And that's because we have another exit signal indicator, and that is this squeeze momentum. So whenever the squeeze momentum indicator turns from green to red, we will exit the position. Let's see which occurs first. So first the trade started trending up, then it was in a sideways period, and finally before hitting either the stop loss or the take profit, the squeeze momentum indicator closed this position. If you take a look on the squeeze momentum, it is clear that the squeeze momentum turned from green to red right here, and the exit was there. So this trade overall was a profitable trade because we entered into a position here, the stop loss was here, the take profit was up here, and we exited the position right there. So this trade was a 1 to 1.39 risk to reward ratio trade after it's closed. So those are the rules for the simplified version of the optimization I made. I know this is a complex strategy, but with the premium scripts this strategy was created, we have much more options. Just take a look. Before showing you the backtest, if you want to get access to this script that is highly customizable and can be turned into an algorithmic trading bot using the automation section at the bottom or the built-in alert functions of TradingView, head over to my Patreon and become a Smart Trader tier member. You will get access to around 12 different premium scripts like this one and to over 50 optimizations I made so far. Now let's go over the backtest. For the backtest, I will use a 0.3 risk per trade, non-compounding position sizing. The initial capital is set to $1 million USD, but you can change it to whatever value you like. The commission is set to 2.5 USD per contract, and the slippage is set to 5 ticks. The backtesting time interval will be the last 10 years, as the original optimization performed well in the last 10 years. Let's see how this simplified one does. And just look at that. As I said earlier, this optimization was made from 2020 till 2024, so on a 4-year time interval, but when I checked how does it performs before and after the optimization date, it also good on the last 10 years overall. During these 10 years, the Simplified strategy took 775 trades, generated 1400% net profit, it had a 40% win rate, a 1.4 profit factor, and a bit high 33% maximum drawdown. If that drawdown is a bit high for you, I recommend you to decrease the position sizing from 0.3% risk per trade to 0.2 or even 0.1. The equity curve looks amazing. It had 2 big bumps, one here and one here, but overall it was trending straight upwards. Let's see how the buy and hold equity curve looks. And as you can see, this optimization is around 3 times better than just holding the US 100 index. Before closing out this video, let me show you how the original strategy performs, which has 2 more filters, the Chandamo with EMA and the volume filter, on this same time interval. And here is the original strategy. The original strategy had slightly more trades, 787, generated 1662% net profit, with a 41% win rate, a 1.5 profit factor, and a bit smaller 31% drawdown. The equity curve looks even better because the second bump is a bit smaller in my opinion, and the first one might be smaller too. Again, this optimization performs 3 times more than buying and holding the US or Nasdaq 100. Well, what do you think of this strategy? Let me know down in the comments. I know this is a bit more complex strategy, but as I said, with these premium scripts, you can do basically anything, and I like to experiment with them. If you want to get access to this premium script and to all of the others and to 50 more optimizations, head over to my Patreon and become a Smart Trader tier member. Link is in the description. And that wraps up today's video. Comment down below how you like this strategy and what should I optimize next. Keep in mind, an ES optimization is also on its way. If you want to see more, don't forget to like, subscribe and turn on the notification bell. As always, thank you all for watching, have an amazing day, and until next time, trade smart.